What's happening, people? How you doing today? Hope you're having a great day so far, right? I know that if you're holding AMC, it's been a couple rough weeks for us, right? But it don't matter, right? We still here, and you always have to look at the positive side, right? And before I get into all that, remember I'm not a financial advisor. It's not financial advice, right? So don't take it as that. Take it for educational and entertainment purposes only. All right, so let's get into it. The talk of the town right now with AMC as well, right? Like it's options. So we're going to talk about that. And like I said, like 2 weeks ago, we were running up, everybody was like, oh, is this the squeeze? Is this a squeeze? No, it was just a little gamma ramp that we had. Okay. And it had to do with the options chain. And so since everybody is, buzzing, talking about the options, I'm going to kind of get into it a little bit, give you a brief explanation, right, of what it is. I've actually talked about it in the past, right? And just to give you, some information first and some facts and whatnot. And then I have a cool little article to show you guys about Melvin Capital too, if you haven't heard or seen anything about that, just to brighten up your day a little bit, all right, if I can. So yeah, let's jump into the information, right, guys? So we can talk about it, So let's do it. All right, it's gonna be a lot of internet stuff over here, right? Information I got pulled up. And actually, before we jump into that information, hold on. I got to show you guys this, right? So Gabe Plotkin's Melvin Capital ends the first quarter with a 20.6% loss, all right? So we know these guys are losing money fast and right and quick, and they're not making the right moves. It doesn't give too many details, but we do know that the money that they got injected last year is already gone. Citadel pulled out their money, and then another investor pulled out like 750 million, I believe. Yeah, let's go back here. So just showing, they're off to a rough start. First quarter. I don't know how much longer these guys are gonna last, right? They keep losing. But here we go. Yeah, 0.72 to pull out 750 million capital from Melvin Capital, right? So they already actually did that. It was due by the end of March. So I don't know, man. I don't think these guys are going to be around much longer, right? And they're the ones who lost big time in GameStop, right? So I don't really care. Whatever. I can just laugh at them. Too bad, right? Hey, you got to deal with the cards you're dealt with. Okay, now back to the options thing, right? So for the retail investor, I noticed that it's just a lot to understand, guys. And if you have never played options and you're thinking about it, my best tip, what I would say is do not buy any or sell any, or do not put any money into it without doing your research first and doing some homework and understanding the basics, because these things move fast. You can win a lot, you can lose a lot, like fast. And yeah, we're gonna get into that information, but it all started with Astro. He put together this really good video, guys. I mean, it's very detailed, helps you understand. If you got some time, go watch it. I will put the link in the description. But this guy Astro, I mean, he's very intelligent in the fact that with the way that he like breaks down charts and looks at the data and all that stuff. So I like when he's really into it and doing his DD and explaining it. And to me, in this video too, it explains a lot of the corruption, because he's using real data, and you can see where it happens and understand kind of like how this thing works, right? Because that's what I was wondering too. What helped me understand is I was like, where is this volume coming from? If there's 90% of the shares that are being held by retail and 30-some% of shares by institutions, right? So how do you do all this with just 10% of the shares that are supposedly left? As well as trades, right? He put this video out yesterday, and I've talked about it in the past too, guys. When we were sitting like at 40, 45, I said, what if we were to buy put options, that way, and make it known and do it Reddit style, where I'll say, okay, we're gonna buy it on this day or whatever, because the short sellers would have to know that. That way they would be scared to bring the price down, because with a put option, you make money as the price comes down, right? So if they knew that we were holding put options, the AMC shareholders, they wouldn't bring the price down, because then they would know that we would be making money as well. So if you got some time, guys, I know that, that's why it caught a buzz in the options, because of trades and because he's saying to play the game. Honestly, I mean, I realized that like a couple years ago, even before the meme stocks, right? I was like, these guys, the retail money, that's why they say, follow the big money, because they're the ones that are moving the charts. So if you follow what they do, that's how you make money in the market, in my opinion, right? So go watch those videos, guys, if you want, It's an option. It's out there. It's good information. While we wait for the squeeze, right, you always want to learn. So if you don't know anything about options, this is where you can start studying, right? So let's give some basics here. Just let's talk about a real, I'm gonna put this link down below, but this is a real basic explanation, because what you have to understand about options, guys, it's an option. You have options to do things with them, right? Like, it's not like stocks where you're just betting that the price is going to go up, right? Because you're buying into it, and the most you can lose is when it goes to zero, right? But it's way different in the world of options, guys, right? So please, keep that in mind. So the way I play them is I buy them, right? I buy like a call or a put option, right? And then I have to sell them to close it out, and that's how you lock in your profits or your losses. But you have to let's just go over this. Two basic types of options. It's a call option, the right to buy a thing, an underlying asset. A put option, the right to sell a thing, an underlying asset. What I want to show you here, right? The strike price. Each option is going to have a strike price that you need to, because that's what the price that you're saying that it's going to go up or down to. The price for which the option gives you the right to buy or sell. The premium is what the price of the option itself, right? So you're paying the premium and somebody's collecting it. Expiration date, on or before this date. So that's why it's risky, because they have dates, and the farther you go out on the dates, the more expensive it is. Okay. So, and also if it doesn't work out, and even though if you buy it long, a few months or a year out, and it doesn't happen, you can still lose your whole investment, right? With stocks, you have unlimited time where you buy it, and then you wait and it doesn't expire, right? Like, you decide when you want to buy it, when you want to sell it. But with an expiration, guys, it expires and you can lose all your money, right? But please do some homework on it if you're going to play them. And that's what the channel is about too, right? To educate you, to give you information, right? The best knowledge, and because knowledge is power. So the best power I can put out there for you guys. Buyers of options, the buyer has the right to buy or sell underlying assets for the strike price. Sellers of options, the seller has the obligation to buy or sell underlying assets when the options they have sold are exercised. Sellers of options, right? So there's a real simple graph, right? You're basically betting against time. So if you're buying, say a stock is $20 and you're saying it's going to go to 25 within, a month, right? So you're betting on that time period that it's going to do that, and that's how you make profit. If it doesn't do that, then you can still lose money, right? Even if the price goes 20, 21, 22, just goes sideways, never hits 25, you lose your whole investment, right? So that's what's really, really risky. I like this part about this. This is a little table, but this is how I'm saying that, like, options, they're layered. Like, you can only really, if you buy a call, you can only really make money if the underlying asset goes up. That's how you make profit. But you can lose profit, you can lose money if it goes sideways, if it has a small fall, if it has a big fall, right? When you buy a call. When you sell calls, it's a whole different story. I'm not even going to talk about that right now, because that's just another way to play them, but I don't play them that way. I've never sold a call. So when you buy puts, the only way you make money underlying asset if it's the price goes down, right? Big profit if the price goes down on a put option. Underlying asset has a small fall. You can make some profit depending on how fast it goes, because it's based on volatility. If it goes sideways, you lose. If the stock price goes up, small or big, you lose it as well, right? So understand that about when you buy a put option. All right, cool. There's that little breakdown. Let's go over here. So this is how you read, basically a call option or put option, an option. You're going to have, it usually represents 100 shares, right? Each option is going to represent 100 shares. You're going to have your date, the year, because you can even buy them a year out, 2 years sometimes, right? A little more. The price, and if it's a call or a put, and then the price that they're selling it to you at, right? So, if it says 50 cents, then it's going to cost you $50 because it represents 100 shares. So you always have to multiply that. Okay. So there's more information here. Like I said, I'm not going to get into too much detail because there is 2 videos, like this one with Astro and this one as well, that has a lot of more of the detailed information. Let's go back. So put option. I just want to give you the real basics, guys, because for retail, like, you're not just going to learn options in a day or a week, right? You really have to put some time, because, like, personally, like, it even took me I want to say, 2-3 months of just reading and trying to analyze it and seeing like how you make money. And then what you can also do is just, do a paper account where you just trade fake money with it and see how it reacts. Or you can do a watch list where you can put in your watch list, and it'll show you how that option is moving. Okay. So now next we got this, what about options? So they sound great, right? Here's the catch. You can lose more money than you invested in a relatively short period of time when trading options. This is different than when you purchase a stock outright. In that situation, a lowest stock price can go is to zero, right? So the most amount you can lose is the amount you purchased it for. With options, depending on the type of trade that you take, it's possible to lose your initial investment plus infinitely more. And this is where it relates back to the shorts, right? Like if they have an open short position, guys, like if the stock price skyrockets, they have to go and buy that share at the current market price, right? So that's what it means, but it's like it's infinitely more. Here's 10 mistakes, I would recommend reading into. Each one has a section and a video. It's going to be, it's a lot of work, right? It's not like easy money. It's not like, oh, just because you buy options, you're going to make money, right? There is actually strategy that has to go into it. It's actually more risk, right? So you really need to be more strategic, in my opinion, when you're doing this, if you're doing the options trading. You have to do what you got to do with your money. It's up to you, but, just understand that it's way more risk than just buying shares, all right? So now that we understand, the basics, let's go into this article, because supposedly, right, this just came out today. It's today the 6th, yeah? Yeah, today's the 6th, right? So do options traders know something about AMC Entertainment stock that we don't? From Yahoo Finance, right? And they're saying that AMC shareholders need to pay close attention to the stock based on its moves in the options market lately. This is because April 22nd, 22, right? So by April 22nd, the $51 strike calls had some of the highest implied volatility of all equity options today. Wow, like in the whole market. What is implied volatility? It shows how much movement the market is expecting in the future. Options with high levels of implied volatility suggest that the investors in the underlying stocks are expecting a big move in one direction or the other. It could also mean that there is an event coming up soon that may cause a big rally or a huge sell-off. However, implied volatility is one of the pieces of the puzzle when putting together an options trading strategy, right? So there you go. There seems to be, some unusual options movement, right? That's all it is. It's just giving you an alert that like, hey, there's high volume that, this might go to 51. That's what the call is. $51 or more, because it can go higher and you make more money, but $51 or more by April 22nd, all right? And it could even happen before that. And the sooner it happens, the more profit you would make, right? That's how options work. Let's go look at the Stonko tracker. This thing has been all over the place. I mean, last night when I went to sleep, right, like pre-market, it said they had about 1 million shares. When I woke up and it was, trading up for about an hour, I was watching it, it said they had 0 shares again. And now we're back to 450 million, right? So 450,000, sorry. And then 12,000 calls currently in the money, not a lot. And the fee is still low, which doesn't matter how many shares they have, right? Like the fee stays almost the same within a range. So I think that's kind of weird. Puts right now, you got more puts in the money, 35,000. And then calls, you have 12,000. Although if it flips and we see a run, this could start, causing a gamma squeeze because of the volume that's there in the out of the money calls right now. And yeah, I was just looking here. What's the day right here? So for this week, right, we can see we have a shit ton at 25, 18,000 open interest, right? And each one represents 100 shares. So this is why I always explain and show you guys this part. I like going over the options because it gives you kind of an idea of like where people's heads are at. But it doesn't always happen. It doesn't always mean that that's where the price is going to go as well, right? Because even at 29, you have 21,000, 30s, 17,000. So if for some reason, right, we've seen these runs before, if tomorrow or Friday we get a pop, this can be good for us depending on how many land in the money, because it works in weeks, guys, too. Like, say we get up to a level of, 30 and they didn't hedge for this, right? The market makers, the people who sold the contracts. That means on Monday or Tuesday next week, Wednesday, they have to go out and buy the shares if they do not have them at least, even if they're synthetic or whatever, like they have to put the money in order to cover that, right? That's why we talk about gamma ramps and people get excited, right? Like the Battle of 801 when all those contracts landed in the money, because eventually they have to cover those guys. And that's why we see these big, runs with AMC. Just to show you, like, right, with the June one, that was because of options, in my opinion. A lot of it had to do with options, and some short sellers closing, right, because they got squeezed out probably right here around this range where you get the extra. But yeah, that's what can happen. And just to show you, right, this is from today. This was posted today. Somebody's charting. They're looking at this pattern where we get this breakout of the next cycle, right? So it's the same thing right now where you had it come up. You're gonna have it come down and test the support, which is what I've been looking at personally, which is $20 right now, right? We do not want to see under $20 because it was so hard to break $20. So then you're going to get the bounce and you're going to move your way back up. And they're saying if we get up here, it's going to be around $180, maybe $250, right? According to the charts here, the lines. So this is from somebody on Twitter. This is off Piney Ape. And we're looking good, right? That's what he's saying right here. So I agree. Let me go show you my charting real quick. I'm going to show you something. This is what's called a super trend indicator, right? And this is on Webull. I like to use it when I'm taking, quick day trades. I really like it because it literally is going to show you when the stock, is going to usually go down or up. It'll point it out. That's what these represent. So you see this one called it pretty good, right? You see that one run, second run, and then if you were holding, right here, you have no reason to sell because you know that the money's still coming in. And then it'll show you when the sell-off starts to go. And this is a 5-minute chart, so this is a little more zoomed in, right? But I'm gonna zoom out as we go. And this is the gap that I wanted to see be filled. We filled the gap. It was at 2077 when this all started and went all the way to 34, right, 2 weeks ago. And then we've had this go on, and this is where we're at. But we finally filled that gap from back then, all right? So that's a good thing because now we can start making our way back up. Let's go to 15 minutes, zoom out. Like I said, see, as you zoom out, it'll show you the longer trends, right? Not just the candle by candle, which is cool. You can use this, but we're still in this channel. Like when you're trading, you can use this. I really like using this indicator for trading like that. And right now it's showing that it's in the green reversal, right? So it's bouncing off of here. So we could expect to see green, right? We'll see. The market's kind of shaky right now, guys. I mean, the SPY's not doing too good, right? It's very choppy. So let's zoom out a little bit more. Let's go to the 2 hour and point this out, right? When we got this rip, went all the way up here to 34, we came and broke this resistance. We chopped through, right here. That's what you want to see. And then we got up to the resistance and got rejected, which is fine. That's a big resistance point. But as we zoom out, this is what I do. Like, I think this is a healthy retracement. I know people are going to think I'm crazy or whatever, or like, but it doesn't matter because this is what you want to see. It's a healthy retracement as long as we get the bounce here and we start making our way back up, right? We want to see at least 25, 30, 35, right? If we're going to start making our way back up, if this is a true reversal, that's where you want to look into. But now that we're breaking, let me go to the daily. It's tough to see. I mean, this looks literally right here. It looks literally like this piece right here where you come down. Next thing you know, boom. And what is this the super trend saying, the indicator? So since that sell-off, it had not flipped on the daily chart until that recent rally where we chopped through these resistance, right? Now we're on top of it. I want to see a huge bounce. I want to see a reversal, right? Because that means that we're going to be exiting this huge, downtrend that we've been in. All right, so that's what I'm looking for on the daily. We'll see. It might come down and touch it. And then, that's why I stay bullish, guys. Right now, I know it's hard to stay positive, but I am staying positive because there's a lot of indicators that are showing a reversal. Look at the cross. We have not got the cross as the weekly chart. It wouldn't make sense for this to go red, guys. I mean, that's a lot of red. And we need to see some green now. It's been under pressure for a long time now, right? So that's what I got for you guys on that. That's just my charting, right? Personal charting. Cool. Let me go to daily. And yeah, so we'll see what happens by the end of the week. Let's see if we can, we're on it right now. I mean, we're testing it. So let's see if we can get that reversal, all right? Let's go back to OBS. So yeah, guys, just thank you for stopping by. I know it's a little bit of a longer video today, but that's what options are. You really have to put into, you know, perspective that it requires studying and knowledge and time, and you don't want to just throw your money in there, because that's really, that's like more like gambling, right? When you're just taking a chance without really understanding what it can do. Okay, so that's what I got for you guys. Hope to catch you in the next video. Peace.